Hi everyone, today I'm going to be talking about inflation and how we should invest in inflation. So this word inflation, it's captured the attention of business leaders, of lay people like us, retail investors, and even governments are trying to frantically control inflation through their monetary policies. So over the last 20 to 30 years, we've had a fairly stable economic environment. I mean, we had dips and challenges such as the 2008 Lehman Brothers episode that triggered an economic downturn for a few years. But overall, most of us haven't experienced severe inflation. Coming out of COVID, we experienced a tremendous bull run, right? The market kept going up, and up, but now things look different. It's more expensive to borrow. And so how do we as retail investors invest in these times? And what are the qualities of businesses that are inflation proof? So I went back to a period of high inflation that was late 70s, I beg your pardon, and early 80s, and also into the 80s was a period of quite high inflation. And so I read Warren Buffett's annual letters from 1978 to 1982. That's 4 years of annual letters. And I found three qualities in businesses that are inflation proof. Let's get right into it. Number one quality of a business that is inflation proof is that it has pricing power. So what does the pricing power mean? In simple terms, it just means that can the business increase its prices for products or services and still retain their customers, meaning the customers will still be loyal to them even if they pass on pricing hikes to the customers. One good way to know if they have pricing power, one indicator, so to speak, is if a business is a monopoly. If they have significant market share in an industry, then they typically also have pricing power. So an example of this is, let's take a look at Tide detergent, right? It's a product that's made by Procter & Gamble. It's famous worldwide, right? Whether you're in North America, India, or elsewhere, Tide is famous for its brand, for cleaning your clothes. It's a detergent that's very popular. Its per unit cost is higher, significantly higher than local brands of detergent that are available. Yet during inflation, most consumers will stick to Tide detergent. This is because Procter & Gamble has pricing power over its products. And so if the raw material prices go up to make that Tide detergent during this period of inflation, what Procter & Gamble will do is that they will just simply pass on that increase to the consumer. But it's not going to affect their market share or revenues because they do that. So that's number one. Does the business have pricing power? So let's look at quality number two. A business is more likely to be inflation proof if it sells products or services that are non-discretionary. So you will still keep buying coffee, sugar, milk, etc., versus buying a new TV or a new watch. So that is another quality when looking at investments during inflation, is whether the business is offering its services or products and if they are non-discretionary. So another way to think about this quality is if consumers can delay the product or service by a business, right? So the economic term for this is price elasticity. Simply means, will consumers keep buying this product or service even if the price changes significantly? So petrol is a good example, or we call it gas or gasoline in North America. Even if the price goes upwards of $5, the demand for petrol will not go down. The demand for gas will not go down. People will still have to drive cars to get to work. People will still have to drive cars to pick up their kids from school. So while people might moan and complain that the prices are too high, and politicians will have messaging related to this, but the fact is that the demand for petrol will not change, even if the prices are through the roof. So some examples, contrasting examples to illustrate this point, right? So a grocery retailer, a normal grocery retailer like Walmart will be less impacted during inflation than say a specialty retailer that sells organic products. In terms of an Indian example, D-Mart will be less impacted in inflation as compared to Titan because people will still need their day-to-day food, but they can delay their purchase of a watch or eyewear, for instance. So that's quality number 2. With that, let's move to quality number 3. And this is related to if a business can continue to maintain its physical volume without tons of investment required to be able to maintain those volumes. So here I'm going to use a quote by Warren Buffett that I found in one of his annual reports between 1978 and 1982. And he uses this analogy of a tapeworm, and I find it fascinating. So let me just quote Buffett here. For inflation acts as a gigantic corporate tapeworm. That tapeworm preemptively consumes its requisite daily diet of investment dollars, regardless of the health of the host or organism. Whatever the level of reported profits, even if nil, more dollars of receivables, inventory, and fixed assets are continuously required by the business in order to merely match the unit volume of the previous year. The less prosperous the enterprise, the greater the proportion of available sustenance claimed by the tapeworm. So this was in the 1981 annual letter. So in other words, what Buffett is saying is that during inflation, avoid businesses that keep requiring to make heavy capital investments to sustain their business. Infrastructure or utility companies are a great example. So we've covered 3 qualities of an inflation-proof business. As you consider maybe rebalancing your portfolio or just doing your research in terms of what businesses are good during inflation, that are strong during inflation, do they have these 3 qualities? Do they have the pricing power? Are they a non-discretionary business? And are they a business that can keep producing its volumes without major capital investments? So I hope you found the insights in this video useful. If you did, please hit the like button and the subscribe button. This is not investment advice, just a disclaimer. I'm merely sharing what I learn and discover in the world of investing and what I'm passionate about. Take it as one data point, and I will see you next time.